Amazing. So are you arguing that the same mistakes cannot happen with the layer two, with all these solutions on the layer two?
No,
And
I'm not arguing that, because I definitely
Mhm.
think that's why I said the human variable was caged. I didn't say it was removed from the equation. You know,
Entirely. Okay.
it's caged
Mhm.
because, yeah, because basically what you're getting is fractional reserves, right? Just look at
Mhm.
FTX. Nobody needs to look any further than FTX to understand that when you get into these types of derivative situations, you can
Mhm.
you can artificially increase the supply of Bitcoin. Now the difference
Mhm.
is with Bitcoin is when the hammer comes down in the TradFi system, they just print money to grease it over,
Mhm.
right? Like, oh,
Mhm.
you're going to collapse, no problem, we'll bail you out. Well, you can't do that. When Sam and FTX needed however many Bitcoin they needed, they couldn't just nobody could print it for them. So it
Right.
was, so there are some checks and balances.
Mhm.
I think what Bitcoin does, why Bitcoin is better, is that it guarantees that creative destruction. So our economy right now, stocks are making all-time highs. People are
Mhm.
still trying to figure out, like, hey, we're supposed to have demand destruction. Why are things still trading at all-time highs? What the hell's going on here? But the fact of the matter is that with these stocks and everything else, the amount of liquidity that's being injected into the system is supporting that. And that all comes back to the human element. That all comes back to the
Mhm.
is the like when the banks were failing and SVB failed. What did the Federal Reserve do? They created the Bank Term Funding Program. And the Bank Term
Mhm.
Funding Program allowed banks to bring their fixed income assets to the lending window and borrow against them, not at market value like everybody else would have to do, but at par value. So they just printed the difference between the market value and the par value of the note or the bond, and boom, problem's gone. The banks that they wanted to fail failed, and the banks that they wanted to get bailed out had access to the window, and their liquidity problems disappeared. Bitcoin
Which is
doesn't
a
allow
fake,
for that.
right? Which is
Yeah,
indeed insincere. Yeah. Yeah.
Yes, exactly. Bitcoin doesn't allow for that. But what it really does is it disrupts the economic cycle, because you should go through a time of economic boom. And through that economic boom, just naturally, because of the human element, the human variable, people are going to make bad decisions. People are going to borrow
Mhm.
money to invest in stupid things that don't work, and they're going to lose. Credit is going to be created and destroyed, but there's going to be coming a time where you get to the top of that, the peak of that economic growth. And
Mhm.
when it starts to turn down, you need to have those companies destroyed. Like, if you look at the US stock market today, there is an alarming amount of US companies that trade publicly on the US stock market that are officially what they call zombie companies.
Zombies. Yeah.
So just look into what a zombie company is. It's not hard to understand. If we didn't have bailouts, if we didn't have a
Mhm.
system that allowed us to just bail people out and avoid the destructive part of the economic cycle, these companies would not exist today. But these companies
Right.
are still here, and they're still not being as productive as they could be because the mismanagement is not being punished. Because the free
Mhm.
market, and that's not to say a person or the government has to punish mismanagement, the free market itself will punish mismanagement. But what the human variable is doing is coming in and printing money to cover up the
Mhm.
mismanagement. And that's why we're in the largest asset bubble in the history of humanity, because the destructive part of the economic cycle is not allowed to take place. Because once you get little tidbits of it, sure, every once in a while, like those couple banks failed, right? SVB, Signature, yeah, there
Mhm.
were a couple banks that failed, but to be honest with you, 9 out of 10 banks should have failed, not just a couple out of 100 of them.
Mhm. Mhm.
And that's the problem. So yeah, a couple things start to go wrong, and then you lower interest rates, print money, you do whatever you need to do, whatever the human variable needs to do to maintain the status quo and to keep control. It gets done, and it gets done at the price of the economy, because the economy doesn't get
Mhm.
to go through the destructive process, so that prices can reset, so that the economy and credit markets can reset, so that the dollar has a deflationary cycle where its purchasing power increases over a certain period of time. That is all being um, just forgotten about and printed over, so to say. But with Bitcoin, that destructive process, like with FTX, it's almost forced, right? It's a forced
Mhm.
process. There is no escape. So in that way, um, I think we'll avoid a lot of problems. But that doesn't mean you can't have bad actors who artificially
Of
expand the
course.
supply of Bitcoin. It's just that they won't be able to get away with it.